Hello, hello. Welcome to a strategy session. I'm going to be talking today about the trend continuation pattern that specifically has to do with double or triple pullbacks to the 8 EMA on a 5-minute chart. So, just to review that, 5-minute chart is the primary chart we're using. And the 15-minute chart can be your anchor chart to kind of give you a bigger picture of what's going on. And I've been trading for a long time, and I've tried a lot of different types of patterns. Um, I've tried doing smart money concepts. I've tried, picking bottoms and picking tops and figuring out, where the best bounce plays would be. Um, but I always seem to come back to the trend continuation play. Why not just find a trend and hop on? Find a great place to hop on an existing trend and use the momentum that's already in the market instead of trying to counter trend trade, which, a lot of people naturally do that because it's a little bit more obvious in a way to find a stock that's trending down and then hope to find a bounce point for that. And a lot of people do that using smart money concepts, order blocks. The inner circle trading is all about that, and it's very popular. I've tried it a lot, and I really believed in it for a while. I thought that it was the holy grail, but I recognize that there really is no holy grail in trading other than hard work and finding a pattern that works for you. And for me, what I've found is the trend continuation play is the way to go. It's the most reliable pattern. It's the most highest probability trading. And if you do it with very specific things in mind, it can be extremely, extremely reliable. I don't just say that lightly. I really have tested this quite a bit. So let me just go real briefly into my trading style, the way that I would like to be trading. I don't always do this. I make mistakes out there. Sometimes I counter trend trade too. It's an old habit, and old habits die hard in trading. But here's what I'm lately doing. Lately, what I'm doing is I'm focusing on only two instruments in Forex. I'm focusing on the US 100, which is also sometimes called the NASDAQ 100, which is also sometimes called it correlates to the QQQ in the stock market, and gold. And in gold, that correlates to the futures market, the gold contract, but in the Forex market, it's called XAU USD. It's a six letter symbol. So on Friday yesterday, we had a pretty strongly uptrending market in gold, and right around 9:30, things started to pop as they normally do, and in kind of watching the markets and seeing where trending was, kind of price action was happening. I was looking at the US 100, and it wasn't really trending too greatly. It was kind of bouncing around in a range down here. But when I looked at gold, gold was trending. So this is the 15-minute chart. So it's easier to pick up on trends, I'd say, strong trends, which is what you want, looking at a 15-minute chart. Once you've evaluated your 15-minute charts and decided you want to focus a little bit more maybe on one versus another, then, and you can look at lots more than two. I mean, I used to look at four a lot, use S&P 500 and the Dow 30. But I find focus is really important in trading. And for me, if I just focus on a couple of instruments and then narrow it down to one per day, that might be a little bit better for me. So if I'm looking at this and I'm seeing that gold is trending right now because we have four strong bars up, then I'm going to jump over to the 5-minute chart, and I'm going to focus on the 5-minute chart. And on the 5-minute chart, what I want to tell you is that the 8 EMA is for strong trending days is the one to keep an eye on. And what I find is that um, you want to buy a pullback that you is continuing up. In other words, don't just try to time it exactly against the 8 EMA and buy the second it touches it. No, you want confirmation that it's actually bouncing off of it, and you want to see that happen a couple times. You want to see that happen 2 or even 3 times. So let's just look at the first pair, okay? And I'm going to call them pairs because or triplets because that's what you're trying to focus on. So we had a strongly trending move up here, and the purple line is the 8 EMA. That's what we're really focusing on. So we had, and the other thing you need to keep in mind is that there's always going to be some resistance. Always, trading is all about trading between resistances, and you can call it support and resistance. I like to just call it resistance because what is resistance above is going to become support below. So why not just always call it resistance, because it's the same line. It's an SAR, support and resistance line. So I'm just going to call it resistance. You can call it what you want. But basically, it's where price stops and it has to deal with an area where price has stopped before. So in this instance, we're going to look at the high a day here. And we can also, if we scale back a little bit, we can also see that this area keeps getting resisted against. It's happened 3 times so far. So you can expect that when it gets up here, something is going to happen again, and it's probably going to resist. So in this case, like I said, you want to mark that, okay? So in this case, you're trying to find pairs. You are trying to find pairs of pullbacks, and you really never want to buy just under resistance because it's going to push back. So in this case, your first pair, you have this strong, you have a strong push. I want to find the right, okay, you have a strong push here. And then you find that you do get a bounce off the 8 here, okay? That's number 1. You never want to buy number 1. And in this case, it's right under that massive resistance. So you definitely are not wanting to buy this pullback in this continuation candle. So you wait for it to pull back again, and it doesn't quite touch here, but I'm calling it a pullback. I've got the wicks off, okay? And if I put the wick back on, I might see, yeah, it did pull back to that area. But the reason I'm taking the wicks off, just so you know, is that it just makes my eyes easier to see what's going on. It's just less busy, and I can pick out the patterns that I really want to find. Okay, so this number 2, this pair right here is invalid because the candle, the continuation candle, completes just below the resistance. And, it's just not good. You just don't want to be buying into resistance. In this case, what happened is it broke through, and traders who were grabbing longs up here thinking, hey, it's a breakout, all right, we're going to break out. It's going to just rock it. No, it usually doesn't happen that way. Usually it'll peekaboo, and then it'll slam back down. And in this case, where did it go? Back to the 8. Okay, and what happened? We had a continuation candle. Okay, great. But where does it end? Below resistance, right? So you still don't want to buy it. You still don't want to buy it because a lot of times it'll double top against resistance and just fade away and fail. And then where are you going to be? Stopped out. Nobody wants to see that happen, right? Besides, well, I was going to say this is the third one, and actually sometimes you can buy thirds, but so it's the third in a series. It's also the first in a new series of 2. So you can see it 2 different ways, but any way you play it, you can see it. It's either a number 1, which would disqualify it right off the bat, or if it's a number 3 in this series, which is fine, it's still below resistance. So either way, it's no good. You don't want it. Okay, so let's wait. Let's say that we're going to wait again for the next one. We want one to hold a pullback above the line. That's what we're looking for. And if we go and we call this number 1, because this is 1 and 2 as a pair, and this pair is 1 and 2. If we go back and we see this one, now we've got something to work with, okay? It pulls back to the 8, which is also support now, okay? It's pulling back and holding above support. I also call this, I have another word for this, and I call this an apex trade. Okay, an apex trade is simply a wedge that price holds above, okay? It's a wedge play. So it's very powerful. So what you want to do is you want to wait for that next pullback to hold and close green, and that's where you can get in, okay? That's the place where you're going to get in. So if you look and see this, now you've pretty much got clear sailing. At this point, you have You're above all your moving averages. You've got another pair of pullbacks here. The second one held above the 8, and it held above the high of day, which had been the high of day like 3 times before. So it's a very, 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 very powerful place to enter. You can enter here at the completion of this candle. And as far as stop placement goes, that is a matter of, debate. Probably the best place to do it would be under the first pullback in that series of 2, because sometimes what can happen is that the trade will try to fall back and it will use this as support. So you want to be under bottom number 1. That's the most conservative. The more aggressive would be directly under the candle. So it's up to you. I'll let you decide where you want to place your stop. I'm not going to tell you where to do that. It depends on how aggressive or how conservative you want to be, how quickly or how slowly you want this trade to play out. But as far as the strategy goes, you can use your trade management strategy, whatever you like. A lot of people will sell partials at the first pullback and then hold, for more pullbacks, etc. There's lots of ways to do it. But if you held everything and held until price closed well below the 8, then in this one you would have got a 3.35 with a very conservative stop, and a lot more than that with an aggressive stop. An aggressive stop would have put you at a 5.22 risk to return on this trade. And if you would have sold at the blow off up here, then 6.26. So any way you play it, management is super important. But to me, entry is, that's where you really make your money, is on the entry. And you really want to you just move away from your entry as soon as possible. Psychologically, it's just so important to just enter at a spot where it's going to rocket. It's going to rocket away from your entry as soon as possible. If you miss this entry, okay, you also have this one available to you as well. Again, you have a pair here of pullbacks to the 8. And at this point, you're well above everything. Now, the other thing that I do is I'm checking the daily, the 4-hour, and the 1-hour also, and before I'm entering, and I'm looking for other resistance. And here, I really didn't see anything. It's been, there was some over here at 2078, but I don't even think we got up there today. We never got that high. So there's really nothing here stopping you. There's no moving averages. Gold is kind of pretty close to all-time highs at this point. And, I guess you could say that pretty soon there's going to be a resistance here, 2075, if we get up there in the next day or two. That's the 1-hour chart. But that's just from today. So you'll be wanting to keep an eye on that level, 20, what is the high here? Something like 2075. But that's today's high. So look for that to be resistance the next time around, and you'll want to hold pullbacks above that too. So, okay, that's basically it for that strategy. It's a really good strategy. I find trend continuation is against 5-minute chart against the 80 MA, sometimes the 20, which is the green, is really super powerful. But you want to wait for a pair of pullbacks. You will need a triplet or a pair because you need confirmation. It won't go very far without the confirmation pullback. So you need at least 2, maybe 3. In order to get what you need, and he needs to be holding above the swing high of that day or the prior day or the prior days. So look out for those swing highs. Make sure you're holding pullbacks, okay, above that level before you decide to get in, because it's going to be rejecting, and this is what I call sometimes it rejects really hard. And I call that a fake out, shake out before the breakout. Okay, so you're gonna find traders. There's always going to be traders that want to buy the breakout, buy the high of day. I don't know why. There usually is a surge around that. That's probably why. But they just never learn. That it almost never goes, and it's always a fake out and a shake out. And people get stopped out. They get faked out, get stopped out, and then the smart money scoops up their shares down here at the next resistance point down. And if you don't buy at the high of day and you don't buy into the high of day, then what are you going to do? You're going to wait until you close above the high of day and with a continuation candle. That is the way to do it. And those are the trades that actually have room to run. So make sure you got room to run. You got clear skies overhead, and you can do really well.